can Nvidia's recent decline be viewed as a buy-the-dip opportunity? Nvidia remains among the most closely watched Magnificent Seven stocks in the market, with a $2.6 trillion market capitalization. That said, the company has shed more than $650 billion in market cap over its recent drop, with signals that headwinds could be persistent. Let's dive into whether this recent decline in Nvidia stock is permanent or a temporary buy-the-dip opportunity. Nvidia stock: is Nvidia a buy now after facing weeks of hurdles? Welcome to Timely Investment Research. On Tuesday, markets stabilized after Monday's $6.4 trillion global equity drop. Nvidia stock rose over 2% in pre-market trading, with other megacap Magnificent Seven stocks also seeing sharp rebounds. On a year-to-date basis, Nvidia stock is still up more than 100%, though it's down considerably from its recent peak, shedding more than $650 billion from its peak market capitalization at the time of writing. There are several reasons for Nvidia's recent drop that are worth discussing. The company announced a 3-month delay on its next-generation chips. This might push other megacap tech stocks to develop their own chips internally at a faster rate. Some analysts have warned that missing sales during this crucial period could hurt Nvidia's valuation. It appears that's already happened, and now the question is whether these headwinds are fully priced into this semiconductor stock right now. Let's dive into this question and see whether we can form an opinion one way or another. Chip production and delay problems. A highly popular GPU among gamers is Nvidia's GeForce RTX 3060, recently named the best GPU under $300. Sadly, reports say the model might be discontinued soon. An insider from Bobatang forums revealed Nvidia is ending production and notifying manufacturers about the last opportunity to order the RTX 3060. Even if the RTX 3060 is indeed being discontinued, it won't vanish from stores immediately. Nvidia typically continues sales for a few months post-announcement. The end of production is significant, as it holds 5.88% market share, skyrocketing past the GTX 1650, which holds 4%. In other news, Nvidia's Blackwell B200 AI chips will be delayed by at least 3 months due to a late-stage design flaw, sources reported. The B200 chips, successors to the highly sought-after H100, will now ramp up production in the second half of the year. Nvidia is delaying Blackwell chip shipments until first quarter, working through tests with TSMC. Microsoft, Google, and Meta have placed huge orders. The chips were expected to launch in 2024, starting Nvidia's annual AI chip releases. AI spending. Nvidia stock has been volatile, fluctuating with market movements. On August 2, it rose following the FOMC meeting hinting at a potential rate cut and positive news from Microsoft increasing AI infrastructure investments. Nvidia benefited from this news. Additionally, Meta Platforms announced plans to boost AI spending through 2025, further aiding fuel to the Nvidia momentum rally we saw form in between various dips. Despite Meta's positive AI news, disappointing economic data overshadowed these tailwinds. Jobless rates are higher in the US now, though recent jobless claims data complicates the trajectory, leading to a market downturn in recent weeks. Nvidia might also see a drop post-earnings if guidance will disappoint, even if it beats estimates. ROI concerns on AI spending loom, but Nvidia's CFO plans to address these with positive metrics. Goldman Sachs remains confident in Nvidia's leadership and expects second quarter results to surpass estimates. Nvidia's first quarter revenue soared 262% to $26 billion, with earnings per share up 629% to $5.98. Second quarter revenue is estimated at $28 billion, potentially setting another record. Analysts expect $28.4 billion. With AMD's strong second quarter and increased AI spending from Microsoft and Meta, Nvidia is poised for another significant quarter. Analysts remain bullish. Nvidia gained 3.8% to $104.25 Tuesday, rebounding with the market after Monday's sell-off and easing fears about chip delays. Oppenheimer's Rick Schaefer highlighted Nvidia's solid AI positioning despite minor delays. Analysts believe the company's Hopper chips will mitigate issues, maintaining a $150 target price for the stock. On Tuesday, New Street's Pierre Ferragu upgraded Nvidia stock to buy with a $120 target, citing delays in Blackwell chips as easing supply issues. He noted that higher spending on current Hopper chips would benefit Nvidia. Susquehanna's Mehdi Hosseini downplayed major delays, stating that yields and forecasts for Blackwell chips remain stable. Many analysts and experts still view AI as a strong trade, suggesting the current dip is a buying opportunity. I believe Nvidia's leadership in high-performance chips positions it for long-term growth. Of course, near-term dips can materialize and likely will over the coming months. But there's a reason Nvidia has turned out to be a long-term gem for investors who have been patient. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.